Welcome back to the Mathematics of Life, where we decode the language of the markets. Before we dive in, a quick reminder. Everything in this video is for educational purposes only. This is not financial advice. Crypto markets are volatile, so always do your own research.
You know, it's not every day you see the market's biggest optimists and its most cautious skeptics staring at the exact same number on a chart. But that is precisely what's happening right now with Bitcoin. All the chatter, all the conflicting opinions, they are all zeroing in on one single critical battleground. And whenever that happens, you know a huge move is probably just around the corner.
So what's the magic number? Well, we're talking about the $50,000 to $52,000 range. Now, this isn't just some random level pulled out of thin air. Oh no. This is the location of what is arguably the single most important long-term indicator in all of crypto, Bitcoin's 200-week moving average. Historically, this has been the ultimate line in the sand, the absolute floor in bear markets, and the final stress test before new bull runs. And right now, literally everyone has their eyes glued to it.
So, how on earth did we get here? How did analysts from completely opposite ends of the spectrum land on the very same data point? It's pretty wild when you think about it. Let's break down the two core perspectives that are converging on this one critical zone.
Okay, so on one side of the ring, you've got Benjamin Cowen. If you follow him, you know he's famous for his sober, strictly data-driven analysis. He's what you might call a mean reversionist, which, is just a fancy way of saying he believes that prices eventually always come back to their long-term average. For him, that 200-week moving average isn't just support, it's like a center of gravity that Bitcoin has historically been forced to touch during any major correction.
And listen to his wording here. It's so specific. We are bleeding towards it. See, Cowen's analysis isn't calling for some sudden dramatic crash. Not at all. He sees this as a slow, methodical grind, where the price is just inexorably being pulled down to that long-term average. In his model, it's basically a mathematical inevitability. It's the floor where the market finally hits reset.
And then in the complete opposite corner, you've got PlanB, the creator of the stock-to-flow model and one of the market's biggest bulls. He's looking at the exact same level, but his interpretation couldn't be more different. He's pointing to indicators like an oversold RSI, which is a classic signal that an asset might be seriously undervalued, and he's not seeing capitulation. He sees this as the ultimate buying opportunity before the next explosive move up. So same number, two totally different worlds.
But wait. What if you're not a long-term bull or a long-term bear? What if you're just a trader, someone looking for an opportunity right now? Well, that brings us to our third archetype, who is looking at this whole situation through a completely different lens.
And that's where a legendary trader like Peter Brandt comes into the picture. He's not really concerned with 5-year models or finding the absolute bottom. He's focused purely on the trend and the momentum right now. And from where he sits, Bitcoin's incredibly powerful parabolic uptrend is broken. It's done. The immediate momentum has vanished. Now, for most people, that's a signal to sell or run for the hills. But for a trader like Brandt, it's simply a signal to pivot.
And this right here is the trader's mindset in a nutshell. A stalled Bitcoin doesn't mean the market is dead. It just means it's time to go hunting for other opportunities. Brandt's logic is just crystal clear. Recognize the main trend is damaged, scan the market for other assets that are showing signs of life, and then find a clear, high-probability chart pattern. In this case, it was a textbook falling wedge in Bitcoin Cash, a classic pattern that often signals a big reversal is coming. He trades that specific setup completely detached from the wider Bitcoin drama. By the way, if you are enjoying this kind of data-driven analysis, please do me a quick favor and hit the like button and subscribe to The Mathematics of Life. It really, truly helps us beat the algorithm.
Okay, so we've heard from the bull, the bear, and the trader. It feels like we've covered all the bases, right? Well, not quite. There is one more giant layer to this entire puzzle. Because all of these analyses, the moving averages, the chart patterns, they don't just exist in a vacuum. They are all taking place within the context of the bigger picture, the macro environment. And this is the central idea from on-chain analyst Willy Woo. He argues that while all the chart watching is super useful, the ultimate fate of this crypto cycle really depends on just one thing: global liquidity. The easiest way to think about it is like the tide. Is money flowing into the global economy, lifting all boats like crypto? Or is that tide of money going out, leaving them all stranded on the sand? And Willy lays out two starkly different paths for us. In a serious downside scenario, a true global liquidity crisis, he sees Bitcoin's ultimate floor as being much, much lower than that 200-week average. We're talking somewhere between $30,000 and $37,000. However,
In the upside case, where liquidity comes flooding back into the system, he still sees a cycle top of $140,000 to $180,000 as being on the table. This really frames the entire debate. The short-term battle might be raging at 50K, but the war itself will be won or lost based on macroeconomics.
So, wow, that is a lot to take in, I know. With all these different perspectives flying around, how do you make any sense of it? Well, let's try to synthesize everything we've just covered into a single, easy-to-understand framework, like your own personal dashboard for navigating this market.
So let's just put it all together on one screen. You have the bear and the bull, both completely fixated on that $50,000 moving average as the key battleground. Then you've got the trader, who's ignoring that battle entirely to find clearer, more specific opportunities somewhere else. And then, watching over the whole scene, you have the macro strategist reminding all of us that the entire game board is being controlled by that huge tide of global liquidity. So what's the bottom line here? The math suggests that the immediate, most decisive fight is happening right now, at $50,000. But the ultimate outcome, whether that level holds and becomes a launch pad, or whether it breaks and becomes the final floor, depends on forces far, far beyond the charts. The math suggests a floor at 50K, but the macro environment holds the key. Remember, manage your risk. This is not financial advice. And hey, don't forget to share this video with your crypto friends. See you in the next calculation.